Yo, what up, everybody? This is your boy Sharaf again. Welcome back to another episode of Disruptive Investing Channel, where we discuss and compare companies involved in disruptive innovations. In today's video, our theme of disruption is the fintech industry, an industry where disruptive companies are looking to combine finance with modern technology to disrupt traditional banking as well as the financial industry. In today's episode, I will be talking about two companies which are not only disruptive and innovative, but are also down significantly from the 52-week highs. The companies that I'm talking about are number one, Square, ticker symbol SQ, which is now rebranded as Block Inc. So in this video, I will refer to the company as Block Inc. instead of Square. And Block has been down significantly, as much as 66% from its 52 weeks highs, but it has recovered some of its losses in recent weeks, but is still down around 50% from its 52-week high at the time of the recording of the video. And the challenger to Square is our next company, which is PayPal, ticker symbol PYPL, which, similar to Block, has recovered some of its losses, but it's still down approximately 62% from its 52 weeks high. The fact that both these companies are down significantly may offer a buying the dip opportunity, but we must also be cognizant of the current market sentiments, which is showing signs of volatility and may dip further in the short term. So, with that warning in place, let's proceed ahead with our analysis to see which of these two companies offer a better investment opportunity or if neither is worth the risk. But before we begin, here is the usual disclaimer. I'm not a financial advisor, so use this video as a guide to do your own due diligence and research before investing, especially in this wild, volatile market. And as always, we will begin our analysis with the introduction and overview of both companies. And up first is PayPal. PayPal Holding, as you may already know, is a fintech company that enables people to make financial transactions online by granting the ability to transfer funds electronically between individuals and businesses. The company operates as a payment processor for online vendors, auction sites, and many other commercial users. In order to understand the company and its business within the scope of this video, the most important thing is to understand how PayPal makes its money. PayPal has multiple revenue streams, some of which includes 1. Customer transaction fee. PayPal charges a transaction fee on many of its services such as international payments, crypto exchange, selling goods or services on eBay. Moreover, like regular accounts, businesses are also charged various transaction fees. Some of these fees include things such as in-store sales, currency conversion fee, and international transaction fee. In addition to customer and transaction fees, PayPal also makes money through additional services such as sale of its card readers, business loans, interchange fees, interest on cash, as well as promoting shipment services. Lastly, PayPal has acquired many companies which operate as its subsidiaries and contribute significantly to PayPal's revenue. Of these subsidiaries, Venmo specifically stands out with more than 60 million users and with total transaction volume of more than 230 billion US dollars to date. Now moving onwards to Block Inc. Block is also a payment processing platform which is primarily comprises of two separate ecosystems of Square and Cash App, in addition to some other subsidiaries similar to PayPal. The Square side of business is aimed at small and medium-sized businesses that allows them to accept credit card payments. Square is more of a business solution ecosystem that offers these small businesses back-end tools such as scheduling, payroll, marketing, loans, and many more. A small business can literally be built entirely on Square ecosystem without the need of any additional fintech app. According to the company, its Square side of business represents a 85 billion total addressable market opportunity, which it can tap into by earning profit from transactions as well as providing softwares, loans, and other financial services to these small and medium-sized businesses. The other block business, which is equally important, is its Cash App ecosystem. Contrary to Square, Cash App is catered toward individual consumers, which allows users to send money to one another, use it as a payment system, invest in stock and cryptocurrencies, all of which has a total addressable market of $63 billion in USA alone. Eventually, Cash App aims to become a platform which can potentially perform all banking functions for an individual, thereby disrupting and even perhaps replacing traditional banks in the long run. Lastly, to complete its suite of financial products, Block has also acquired buy now, pay later company called Afterpay for 29 billion US dollars. Block intends to integrate this buy now, pay later feature of Afterpay into Cash App to give sellers of all sizes a way to let buyer acquire their goods and services while paying at a later date. We will start looking into the financial of these companies by first looking at their market cap. And as you can see, PayPal is simply a much larger company with a market cap of 135 billion US dollars, which is significantly larger than the market cap of Square, which stands at 75 billion US dollars. While the market cap is a good measure to assess the relative size of the company, but other ratios like PE ratio and PS ratios are a much better indicator of the financial health of a company. We can see from the chart that the PS ratio of Block is 4.2 compared to 5.33 for PayPal. What this tells us is that Block is producing higher revenue relative to its size compared to PayPal. This is evident when you look at the annual revenue of both companies in 2021, where the revenue for Block in 2021 was 17.66 billion, which is not too far off from PayPal's revenue of 25.37 billion in 2021, even though PayPal is almost double the size of Block by market cap. Another interesting fact that you can already see in the revenue chart of two companies is that the growth of revenue for Block was much higher than PayPal since 2018. In fact, if we do a simple growth calculation, we can see that between 2018 to 2021, Block's revenue grew by mind-boggling 435%, whereas PayPal's revenue growth in the same period was only 64%, which is not even comparable to the Block's astronomical growth rate. By this measure, it wouldn't be surprising if Block soon exceed PayPal's revenue in a year or two. However, on the contrary, as soon as you take notice of the PE ratio, it portrays a completely different picture. We can see both in terms of trailing and forward PE ratio, PayPal is doing much better than its counterpart when it comes to profitability. This means that PayPal can convert its revenue to profit much more efficiently than Square, that is, at least for now. Another way to look at the PE ratio is through the lens of earning growth rather than just the absolute numbers. More specifically, you can see the difference between the trailing PE and the forward PE ratio of Square is more dramatic than the difference between the trailing and the forward PE ratio of PayPal. Square forward PE ratio is 60 compared to its trailing PE ratio of 409, which means that its earnings are projected to grow at a much faster rate than PayPal. So the main takeaway from this analysis is that even though looking strictly at the valuation of two companies, PayPal may seem like the better option for now, but once you take growth into account, it does seem like it won't be long before Block overtakes PayPal in terms of both revenue and profitability. And while we are looking at the earnings, let us also look at the quarterly earning reports of both companies. If we start by looking at Block, you can see the actual EPS for Q4 2021 was 0.27, while the guidance was at 0.22 EPS. Therefore, there was a beat of 5 cents, and the projected EPS for the next quarter is expected to be 0.25 cents, which is similar to the most recent quarter result. Although you can see that Block's EPS slid off from its pandemic highs, but they still have been relatively stable nevertheless. The same could not be said about PayPal's guidance for their EPS for the next quarter, where a massive drop in earning is expected, representing a staggering drop of 20% in EPS from $1.11 to only 87 cents in next quarter, which definitely is not a good look for the company and a cause of concern for the investors. Beyond the financials, another important aspect in gauging the health of a fintech company or any other user based tech company is to look at the metrics surrounding its users. For PayPal, we have seen steady user growth quarter over quarter and year over year. However, one concerning factor is that although the users are growing, but every subsequent quarter they seem to be growing at a slower rate. For example, you can see in Q4 2021, the year-over-year growth was 13%, while in Q4 2020, it was much higher at 24%. This is also reflected in the chart on the right, where you can see the numbers of new users being added is declining over each quarter, which again is not the most positive thing. Considering the PE ratio of PayPal is still relatively high at 26, you would expect much higher growth from a company with such high valuation. And PayPal user growth seems to be plateauing right now. To make matters worse, PayPal found that there were approximately 4.5 million illegitimate accounts, which they then had to adjust for in their overall numbers. On Block Inc. side, we have to look at the customer growth separately for its Square and Cash App ecosystem. I was not able to find exact user number for Square ecosystem, which is expected since, as mentioned before, Square is a suite of software systems integrated with Square hardware for small businesses. So individual user account metric doesn't really make sense in this context. However, what we do have is the number of businesses with gross payment volume greater than 125,000. which is further divided into two categories of businesses with annual gross payment volume, or GPV, between 125,000 to 500,000, and businesses with the annual GPV greater than 500,000. And you can see from this chart that in both cases, the number of businesses within the Square ecosystem doing greater than 125,000 GPV is growing exponentially quarter over quarter, and this can be seen as a positive reflection on Square's customer base. The next chart shows Square ecosystem's total gross payment volume across all businesses. And even here, you can see a steady growth with year over year growth reaching a staggering 86% in Q2 2021. However, this did slow down a little bit in Q3, where the year-over-year growth was down to 43%, taking into account for post-pandemic correction. Although not shown on this chart, but the latest Q4 GPV was up to 46.4 billion US dollars, representing an year-over-year growth of 35%, which again was down from previous two quarters. But once again, I think this represents the steadying of growth after pandemic surge. Next, we will look at Cash App growth within the Block ecosystem. From this next chart, you can see that overall Block's profit have been growing at the compound annual growth rate of 50%. But what is more telling is how fast Cash App ecosystem profit is growing, and you can clearly see it is the one driving the majority of the growth for Block Inc. One of the factors that drive Cash App's growth is its sticky customer base. From this graph, you can see the yearly profit broken down by customer cohort, or the year in which group of customers joined Cash App. And you can clearly see each year cohort not only keeps providing profit to Block in subsequent years, but also their total share of profit increases by the year. However, if you're looking at Cash App's growth, it is only fair to measure it against comparable application of its rival, and for PayPal, that application is Venmo, which, as mentioned before, provides payment solution to Cash App. In terms of monthly active user, based on the last available data in 2019, Venmo seems to be slightly ahead, but Cash App is catching up fast, and it won't be surprising if it has already surpassed or soon to surpass Venmo. For example, as per the latest numbers in December 2021, the monthly active user for Cash App was already 44 million, growing at a respectable rate. Unfortunately, I couldn't find Venmo's recently monthly active user number, so the hypothesis is not perfect. But if you look at the following chart, you can see that in terms of download, Cash App has already surpassed Venmo in 2019. The idea is reinforced by the following graph of Google Trends, where we can see the search interest in Cash App has overtaken Venmo in 2019. Same time, it overtook Venmo in terms of downloads. Anyways, the main takeaway is that Cash App is growing at a much faster rate and is more profitable than its Venmo counterpart, although they are both subset of Block and PayPal respectively, but they do represent the direction of their respective parent company as well. In conclusion, I would say both PayPal and Blocking are great companies at their current valuation. And considering the fact that the Feds might be raising rates, we might be technically entering in a bear market, and in such a market, a high growth stock with high valuation has a greater probability of taking a bigger hit, which in this case is a Block. So if you aren't invested in either of the companies and want to get in at this point, I would say PayPal is a safer choice as it offers better valuation and better protection against the downside risk in the short term. However, if I ignore the current market sentiment, then Block definitely is more innovative of the two companies and may offer greater upside in the long run, but also being riskier in the short term. As far as I'm concerned, I'm a little biased toward Block in this comparison as I tend to gravitate towards riskier companies which offer greater disruption and in turn greater upside, which again happens to be Block. But that doesn't mean it is wrong for someone to choose PayPal or Block, especially if they're more risk averse. And also for full disclosure, I do own Block shares and have also taken a significant loss as well, but no way I'm selling my stock at these levels, and I may also be looking to add more to my current stocks. So that pretty much concludes the video, and I hope you enjoyed and found some value in this video. Again, if you disagreed with my analysis or have a different viewpoint, please share it in the comment section. Also, the very last thing, please don't forget to like and subscribe to this channel so that I can keep making more of these videos. With that being said, I'm going to sign out now and hopefully see you in my next video. Peace.